Hello, ladies and gentlemen. Good morning from this part of the world. And depending on which time zone you're tuning in from, I wish you a good afternoon and good evening. I'm excited to welcome you to another promising edition of our Forex Morning Mastery. In fact, our first edition for the new week. I trust you all had a wonderful weekend, and I hope we are all pumped up and ready and well prepared for the new week. Well, as always, I'm preparing for the week with my usual assets, which are three, of course, including the US All Sport, the USDJPY. In fact, I was looking at the GBPUSD during the weekend with the hopes that I may want to reconsider it for this week, but after looking at the structure, the market still is looking very choppy. There is still an indecisive nature surrounding the character or the behavioral patterns of market participants in that market. So I decided to hold on a little longer, maybe for a week or two, before I come back to the JPUSD. So we shall continue our monitoring of the USDJPY, which is part of the asset we are monitoring for the week, and of course the final one on the list, which is my favorite, and that is the XAUUSD. I'm very excited to be with you here this morning, as I do have simple trading setups that we are going to be using to navigate the market this week. During the weekend, I was able to share publicly, though very, very late in the night, my thought process or my idea as regards to what my plans are for the XAUUSD, but I wasn't able to do that on the USDJPY and the US All Spot. So today we are going to be doing a top-down analysis on the USDJPY and the US All Spot. So it's an opportunity for you to see how I look at the market and how I correlate the fundamental factors into my price action analysis. So this is not a session you want to miss on. So I encourage us all to stay tuned in so you do not miss out on any of the valuable ideas we will be discussing today. And for those who are joining me for the first time, you are highly welcome on board. Very excited to have you join me this morning. The Forex Morning Mastery is not a signal service platform, but instead an educational avenue where we all come together to become a better trader by trying to look at how market participants are behaving using the fundamental factors and of course price action based analysis to get a picture of what is going on and use that information to strategically position ourselves for the next move. The Forex Morning Mastery happens 3 times in a week. That is Mondays, Wednesdays, and Fridays, 8:30 a.m. UTC, 9:30 a.m. West African time. So once again, I welcome you on board and encourage you to actively engage in the comment section. And do not forget to give the video a thumbs up. Very, very important. It's valuable to me, and of course is the cheapest way you can actually support this community to grow. So thank you very much as you do so. So with that being said, here we shall be diving right into the market. In fact, the week is I started on a very cautious but optimistic note, as we saw the US dollar do a little bit of oscillation this morning, but after that, the Asian session, we saw some traction at the beginning of the week. So I still think the market is still leveraging on the fever of Donald Trump's victory. We are going to be looking into the market to see if this momentum will continue, or are there chances that profit-taking activities will continue into the new week. So before we begin, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today and for the rest of the week. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that valuable information that we need, and most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are looking at for this week, we shall be focusing on, though we usually focus on high impactful event, but on days when we do not have high impactful event, we include mid-tier economic features, as this will also give us an idea into what majority in the market are looking at to make any informed trading decisions. So based on the asset we are looking at for this week, we are going to be focusing on economic features from both the United States and the Japanese economic docket. Now, for today, we do not have any event for today. In fact, we had one yesterday evening, that is Sunday, November 10th. We had the Fed official speech, that it was cash carry, though I'm yet to get any insight into what is said yesterday. I still have not gotten my head wrapped around whatever information it passed on yesterday. However, we also had the current account reports. This is released by the Ministry of Finance in Japan. This is from the Japanese economic docket, and it gives us an insight into the flow of current transaction in the Japanese economy. So if the account indicates a surplus, that shows that there has been that the amount entering into the country exceeded what market had expected. And if there is a deficit, then that shows that there is more outflow from the Japanese economy compared to the inflow into that economy. So usually a high reading is considered to be positive for the yen, and a low reading is considered to be negative. Now, if we look at the data here from the previous month, we had a 3.933.1 billion, 3 trillion rather, 3.933 trillion Japanese yen for the previous month. And in fact, market participants and economists were projecting that we may likely see a 3.26 trillion, but unfortunately that was not the case, as the actual data came in at a 1.7 trillion Japanese yen. So that was a deficit of about 4.10 deviation, which is not that a supporting factor for the Japanese yen. And we can see, for those of you who had been monitoring the USDJPY this morning, you will see that the US dollar gained some significant traction in the last 3 to 4 hours or so on that particular asset. So we are going to be looking at if this momentum will continue today, or are there chances that the yen could reverse this momentum to push price to the downside. So this was what we have seen so far this week in terms of economic events, taking into account the high and mid-tier economic features. So since today, Monday, November 11th, is absent of any impactful event whatsoever, that means we shall be relying on our technical skills to give us an insight into how market participants are thinking, how they are behaving, which we shall definitely see reflect on the chart as price action. Now, in as much as there are no high impactful event for today and tomorrow, we should not ignore the fact that there are major events coming up later in the week, which is definitely going to influence the way market participants will behave. Now, on Wednesday, November 13th, we have a very high impactful event in the form of the consumer price index. This is one of the most popular event for this week, and of course major key players will be looking forward to it, as it is considered to be an inflationary gauge data, so they might want to step aside waiting for the outcome of that data before placing any aggressive bets. And this is definitely going to be affecting the US dollar market dynamic. Now, for those who don't know the CPI data, well, this is a data that measures the average change in prices of goods and services in the last 30 days, and also it indicates the inflationary level in the United States economic docket. Now, generally, a higher CPI usually signals rise in inflation, which may lead the Fed to consider maintaining or increasing interest rates, and this can strengthen the US dollar. However, a low CPI may prompt rate cuts, weakening the US dollar along the line, and so this kind of reports are closely watched as they influence monetary policy decisions. Now, another thing I would also like to emphasize here is the Donald Trump's victory, and there is this popular belief in the market that his policies tends to increase inflation and of course bring buoyancy into the US economy. And the fact that the Fed were dovish during the last week interest rate decision, remember they cut interest rate by 25 basis points, and which is a sign that inflation is thinning out. But the fact that Donald Trump is coming in, I think there will be a shake-up in that idea, and there will be possibilities of probably maintaining interest rate depending on what the CPI data will be today this week. So this is one event we want to be looking forward to, and of course we, as a result of this anticipation, we may likely see extended sideways trading activities today and tomorrow. So we need to take all of this into account while we initiate any positions today and tomorrow. So if what this simply means is that if our positions get triggered and price action moves significantly in our favor, we obviously want to be moving our stop losses, secure the profit, as there is a high tendency of price snapping back into that entry point. So it's a very, very important thing we want to note. Then another event that we also be looking forward to is the Fed chairman's speech. I think that one is coming in on Thursday. Everyone will definitely be looking forward to that, especially after the interest rate decision last week and the new development of the US presidential election as well. Then we also have the producer price index coming in on Thursday too as well. This is also considered to be an inflationary data, but at the wholesales level. So this data measures the average change in prices that producers receive for their goods and services within the last 30 days. So it is another inflationary data we also want to be looking forward to. And I forgot to mention on the CPI, economists are projecting a 0.2%, just like the previous month. So we're looking forward to see what the actual data will be. Theoretically, if the data comes in higher than market had expected, we may likely see the Fed maintaining current interest rate or probably increase interest rate, which could favor the US dollar. And the PPI data also is expected to come in at a 0.2% expansion as against the previous month, which was at break even. So we're looking forward to this event, and the reason why I am mentioning this event today is because of the absence of economic events today, and the anticipation of this event definitely will influence how market participants will be behaving today and tomorrow. So with that said here, I hope we marked out the timing. Very, very important, as we definitely want to be around to see what structural patterns this anticipation will evolve into. So with that said, we shall be diving right into the chart. Let's dissect the current market structure to see how market participants are behaving, and of course use that information to strategically position ourselves for the next move. So, the first asset we are going to be taking on this morning is going to be the US All Sports. So, since I did not share my idea on the US All Sport during the weekend, I will be taking us through what my thought process is looking like on the higher time frame. We want to do a top-down analysis. Let's look at things from an holistic perspective before we go down into our execution time frame. But before we go into the technical details, let's quickly run through what the market driver is looking like behind the scenes. What are market participants looking at to decide whether to hold on to the crude oil commodity or dump it for another asset? So, well, while looking at the financial news this morning, I had a couple of factors here that could favor the US All Sport, one of which is the expectation that Donald Trump may tighten sanction on OPEC Plus member like Iran and Venezuela, and this could reduce global oil supply, supporting the prices of US oil. Now, if there is sanction on these countries as regards to their oil commodity, there is a high chance that whatever they will be supplying to the global market will reduce immensely. And from our simple economics, when supply reduces, what happens? Demand increases because of the fact that there is scarcity of that commodity in the market. But I don't know if it should, because Iran itself does about 2 to 3 million barrels per day. So whatever the implication is will rub off in the global market. So this is one sentiment I'm banking on to consider buying the US All Sport. Then secondly, US refiners are expected to operate at over 90% of their capacity amid low inventory levels, suggesting robust demand for crude oil, which could lift prices to the upside. So that is another factor here. However, in as much as the path of Leicester is looking very bullish, we are going to be looking at that in a moment because we are sitting right above a robust demand zone at this point. Now, one thing that I'm very that is making this bullish traction skeptical for me is the disappointing China stimulus. Remember, we talked about this last week. There was a 3-day session where policymakers had a meeting on what the stimulus package is going to be looking like. Now, at the end of the day, China's concluded in doing a 10 trillion yuan debt package. That's about $1.2 billion. Is it? I'm not sure. I think it's It's not. I think $1.2 trillion. Yes, $1.2 trillion stimulus package. In fact, there was an expectation of over 3 trillion, but this disappointing 1.2 trillion may rub off on the market. And remember, China is the largest importer of crude oil in the world, and we do not know if the stimulus will be enough to revive the Chinese economy at the moment. But let's see how that is going to play out during the course of the week. So for me, it's a shortcoming. It was a disappointing news to hear that the stimulus wasn't as high as market participants and economists had expected. So, and also there are other various factors in the Chinese economy too as well. We have the lower than expected economic indicator, such as the consumer price index and producer price index, which points to deflationary risk in China. And this weaker economic outlook will suggest reduced demand for oil in China, pressuring oil prices at the same time. Now, another one is the fears of supply disruption due to Storm Rafael in U.S. Gulf of Mexico. We talked about this last week. Now, from the latest report, now it appears the storm is easing at the moment, removing a potential supporting factor for oil prices. So for me, it's going to be market participants are going to be deciding within this counter counter counterintuitive factors that I just mentioned here. So how are market participants going to be digesting this information? Will it favor the buyers in the long term, or is it going to be favoring the sellers? So let's go into the chart and see what things are looking like in ahead of this new week. So my analysis started on the 4 hours time frame, where after taking into account the character of price action in the last 2 months, no, in the last 1 month, I think since the second week of October, this is what I was able to come up with. Now, if you remember, the structure from last week still remains intact, except for the last week, since the beginning of the month, where we saw a little bit of consolidation phase. So since last month, we can see that the price of crude oil was dropping significantly, as we saw a series of lower highs in that regard, giving us this beautiful descending trend line. And of course, we saw what happened at the beginning of the month. Price finally broke out of that structure, and this for us last week was a signal that made us to buy the US oil spot during last week trading session, with the hopes that price will continue to the upside. But that was not the case. As you will see, the market went through a consolidation throughout the course of this month, as price confined within the 72 and the $70 area to emphasize the prevailing uncertainty in this market during this time frame. Now, buyers and sellers are cautious at this point in time. One of the major factors that influenced this indecisiveness was the anticipation of the US presidential election, which has finally come into play. And of course, this has boosted the US dollar significantly. And when the US dollar's value rises, what happens to the price of crude oil? It drops significantly. And why is that? Well, when the value of the US dollar increases, you know, the crude oil is a US dollar denominated asset, and for you to buy the US crude oil, you will need to convert your local currency to the US dollar, which is now very expensive. And due to this expensive commodity at this point, it could reduce the demand for crude oil. So for me, we are still within maybe the buyers and sellers who's going to take over the market anytime soon. So we're still in a delicate area at this point in time. So while looking at this consolidation phase, I was able to notice that the last 2 weeks, price though has found some higher highs and higher lows. So we have an ascending trend line, which we're going to be using to navigate this week's trading session. In fact, I have 2 of them after connecting the series of higher lows. And you know how we treat our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that supports the idea of buying. Now, in addition to this trend line is my key level, which is duly situated at this psychological area at the $70 mark, as you will see here. And of course, this area had played a significant role in determining the direction of price action in the last 2 to 3 weeks. You can see how it at some point it was a demand zone right here. You can see it was a demand zone here too. Then we saw price break through with an engulfing bearish candle. And then at the beginning of this month, price climbed back above the structure. And ever since price climbed above the structure, you can see how buyers have maintained momentum above this area. As every point in time sellers tried to break through, it was met with strong resistance from the buyers. And from last week trading session as well, we saw what happened. As soon as price came in, we saw buy pressure resume from that same level. So with this understanding, I have a temporary demand zone between the $69 and $70 area, where as long as price remains above the structure, we will continue to maintain a bullish bias. Now, with that being said here, you would agree that we are at a crucial juncture where, depending on how market participants react to this key level during the early hours of this week will determine whether we are going to be buying or selling. Now, for us to see how the market has been reacting to this important confluence, we will scale down into our execution time frame, which is the 1 hour time frame. Now, on the 1 hour time frame, I was able to identify a simple trading setup. As you will see, the new week started on a strong bearish note. Price started the week at around the $70.42 level, dropped into that key level around the $70 and the $69.90 area, and the appearance of buy pressure around and above the key level for me was a beautiful signal to buy this commodity at this point. So I placed a buy here, and of course I already have my second position triggered at the breakout of the resistance line. Remember, we have a range bound structure to start the week with. As you will see, price was confined within the $70.42 and the $69.90 level. And you know how we use our range bound structure. We exercise patience, waiting for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So if you are still yet to take any move on this position, I think placing a buy stop order above the resistance line is looking promising at this point, and let's see how far that momentum is going to go. And remember your stop losses. You want to be having enough breathing space for price action to move around. So between 40, 45, 50 pips will do just fine on this one. And of course, if there is any new level or structures that will help us maximize the potential of this bullish move, if it comes up at any point in time, I will definitely give you updates on my Telegram platform. Now, in as much as I am looking forward to buying opportunities in the USOILSPOT, we cannot ignore the potentials that sellers can also come into play. Remember, we talked about the disappointing China stimulus package. We talked about the weak Chinese economic data, and of course the easing storm Raphael concerns also, which could push price to the lower side. So if that is going to be the case, if that is what will be the edge for market participant today, where is the most suitable area to consider selling the crude oil? Well, for me to sell, which I doubt will happen anyways, but if it does happen, the area we'll be looking out to sell is if price will break down and retest my key level and that support line at the $69.90 level. Now, one thing I would like to mention here is that we are not just jumping into that sell position right away. What I mean by this is that we are not placing a sell stop order just like we did for the buy position. Instead, we will wait for confirmation to happen before jumping into a sell position. And why have I said this? The reason why I've said that we will wait for confirmation is simply because of the fact that price is sitting within a demand zone. Remember what we saw on the 4 hours time frame. Price action is sitting within a demand zone, which has been consistent since the mid month of October, I guess, for 3 weeks thereabout, and that area has been supporting it. Every time sellers come into that area, we see buyers push price to the upside. So for me, before I can consider selling within a demand zone like this, I would rather want to see price break through the key level first of all, and then come back. Then I see signs that buyers are finding it difficult to climb back above the key level, and this will reflect on the chart as continuous selling pressure on our lower time frame. It could be the 5, 10 or 15 minutes time frame. Then we can actually join a sell. Now, when we join a sell and price moves, remember we have the second ascending trend line we spotted here on the 4 hours time frame. So this trend line here could still be a bust up for sellers where buyers could jump in to continue that uptrend move. So As soon as price gets close or into the structure, you want to be moving your stop losses, secure some position while we wait patiently to see how the market is going to be reacting to that trend line. If it gets broken and retested, then we want to be adding more sell position. But if we find buy pressure around the trend line where price probably evolves into a double bottom structure, inverse head and shoulder, or any of its sort, then we will start considering buying at the breakout of the neckline of those reversal pattern. So this is what we are looking at for the US All Spot today and for the first half of the week. So our center of focus is around this new structure we have here between the $70.42 and the $69.90 area. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we move into the next asset on our watch list. Stay tuned in. All right. So I think okay, there are a couple of comments here. Good morning, Michael Moa. Flow Right, good morning to you. Thank you very much. Good morning to you, Torres Master. I trust the week will, we always trust, we always hope that the week will play out very well for us. And as always, we'll always mark out structures that we are going to use to make our job easier. So in the absence of no questions, I want to assume that we are all on the same page. So with that said, let's move right into the next asset on our watch list. Stay tuned in. I need to get something out of the right one. So the next asset we are looking at this morning is the USDJPY, that is the US dollar against the Japanese yen. Well, this week has started with a strong bullish move. I already have a position triggered already on this particular asset, and of course a lot of things has been influencing the US dollar in recent times, and of course the a lot of things are happening in the Japanese economy which is not favoring the yen at all. So we have situations like the division amongst Bank of Japan's monetary policymakers as regards to the rate hike situation there. We also have political uncertainty in Japan, and we also have concerns about fears that the president-elect Donald Trump may implement protectionist measures against Japan, further reduce demand for the Japanese yen. Then the optimism around Donald Trump's policy supporting U.S. inflation and limiting Fed rate cuts, supporting the dollar as well, is putting additional downward pressure on the Japanese yen. So for me, the path of resistance for Japanese yen is still looking dovish at this point in time. I think the US dollar will continue to gain more traction as long as this situation still lingers during the course of the week. However, with all of this being said, it doesn't necessarily mean that all is just in favor of the US dollar at this point. Of course, the Japanese yen also has its own positive narrative that it could bank on during the course of the week, like the potential intervention of the Bank of Japan. You know, we've been talking about this for about 2 to 3 weeks, where Japanese authorities have been making verbal intervention, signaling a potential defense of the Japanese yen and helping it curb its depreciation further. So this one here, we don't know when it's going to happen. It's very uncertain at this point, so we don't know if it's even going to happen at all. But I think buyers of the yen will still be banking on this potential intervention to capitalize on some trading opportunities. Then the cautious market mood also supports safe haven demand. Japanese yen is considered to be a safe haven, which could limit losses for the yen as well. So it's a possibility that could also be relied on to buy the yen. So with that said here, with all of the information we have gathered here, let's scale into the chart and see how the market participants are behaving. Now, I think I started my analysis on the 4 hours time frame. Yes, I think I started it on the 4 hours time frame. So on the 4 hours time frame here, I didn't really go that far. I think I went to as far as about 3 weeks ago to identify a setup. Okay, I think I went to as far back as when was that? I think September, to acknowledge the bullish trend that you see in this market. And if we do that correctly, connecting the series of higher lows, you can see that we have a couple of ascending trend line here. We have the first one here, which is the major one, that is will be playing a significant role in guiding our trading decisions today. And then I have the second one projected to capture the other pivot lows down here. So, and one thing you will notice here is that since price broke above this ascending trend line in the month of October, price action had remained above the trend line to emphasize the strength of the buyers at this point. In fact, look at what has happened since the beginning of the month. We saw the first touch here, price moved up, and then at the end of last week, price action came back into the trend line, and the beginning of this week has seen a renewed buying activity around the US dollar. So for me, both from the fundamental and technical perspective, the path of least resistance for the US dollar against the yen continues to remain to the upside. Now, to help us navigate the structure today, For this week, we have our key level at the 152.200. Let me zoom in so we can see things clearly. So we have our key level right here at the 152.200 area, an area which can also be considered as a demand zone. Now, besides that key level, look at this descending trend line here, which captures the descending trend line prior to the beginning of this month. And look at what happened last week. We saw price break out of that trend line with an engulfing bullish candle, and theoretically we do expect that at some point price is likely going to come back, retest, which actually has happened, and the beginning of this week has seen price continue that uptrend move. Now the question here is, how far is this going to go? So with all of this, and for the fact that price is sitting at above this confluence of the ascending trend line, descending trend line, key level, and the demand zone, well, this is sweet spot to continue looking out for buying opportunities. Now with that said, here let's scale down into the 1 hour time frame, our execution time frame, to see how market participants had responded to the structure. Now, so scaling down into the 1 hour time frame, we see things much more clearly. So you can see here, price started the week around the 152.660, and price had, since the week started, price had moved over 100 pips. I missed out on majority of this move, as this happened during the Asian session, so I wasn't around. I was asleep when this happened. But if you are taking advantage of that opportunity, well done and kudos to you. So for me, I'm already in one position here at the breakout of this resistance line, so I'm hopeful that price will continue that momentum. But if it gets taken out, I will be looking at price coming back to retest the 152.850 area and the 152.660 to continue that uptrend move. So let's see how this is going to play out going on today's trading session. So I have a buy position triggered at the 153.675 with the hopes that price will continue that momentum. It's a risk worth taking for me. So let's see how this is going to be playing out. So if you have any questions, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. Then before I go any further here, we talked about the bullish potential here. What are the chances that sellers could also come in at this point? So if we're talking about long-term sell, I would rather want to see price take out that demand zone and the key level at the 152.200 area. Now, if we are talking about short-term trading opportunities, there is a potential of selling pressure resume at the breakdown retest of the 153.675, giving us a short-term trading opportunity, maybe back into the 152.850, the structure that was broken this morning, or the ascending trend line, or even the descending trend line here to continue that uptrend move. So we are looking at a minimum of about 80 to about 110 to a maximum of about 150 to catch here if price does that. So that is a short-term selling opportunity you have there. So let me just illustrate this here. So breakdown retest could welcome short-term trading opportunity. So if you are a scalper, you feel comfortable taking counter trend opportunity, well, this could be a sweet spot for you. So let's see how the market will play out from there. If you have questions, feel free, let me know in the comment section. So I will take another 5-10 seconds off before we move on to the final asset on our watch list. Stay tuned in. Okay, so I see you, Mr. James. Good morning to you. Good. Okay, glad to have you around with us this morning. All right, thank you. So, with that said, and in the absence of no questions, I want to assume that we are all on the same page. Hope you've marked out these levels and structures accordingly as we have illustrated during the course of the session, as we will be needing them as a reference point to guide our independent trading decisions today. So, with that said, let's move on to the final assets on our watch list. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, of course. And what an interesting situation we have here. Remember, the XAUUSD have been on the rise since the beginning of the year, breaking records upon records, month in, month out. And we saw the first huge decline ever since the beginning of the year happened last week Wednesday following the victory of Donald Trump during the US presidential election. And majority are considering this downtrend scenario we saw could be the beginning of a potential retracement of that impulsive move that tested at all-time record high at the 2007.90. And how far will this momentum go? We never can tell. But one thing we can talk about here is the fact that the US dollar is resilient at this point in time. The US dollar is strong, supported by various factors like a strong a strong US dollar as a result of the optimism over Donald Trump's anticipated expansionary policies, and this strengthens the US dollar along the line. And we also have high US Treasury bond yields as well, which is also going to be supporting the US dollar. And the positive sentiment around Trump's policy agenda continues to fuel a rally in the equity market, which usually diverts from safe haven assets such as gold. And of course, the Fed interest rate cut expectation appears to be reducing following the election of Donald Trump, which could also favor the US dollar against the gold commodity. However, in as much as this is looking so at the moment, we cannot ignore other factors as well, which also will be playing in favor of the gold commodity. Now, the release of the upcoming economic indicators such as the US consumer inflation, the producer price index, and the retail sales data coming up later in the week will be keeping investors cautious, which may lead to more interest in gold for its safe haven status, at least in the meantime, before that event happen, before they finally make a conclusive decision. Then the potential of a softer risk appetite is also there too as well, as traders anticipate this data, that is the inflation data, and of course the Fed chairman's speech, which is coming up on Thursday. It could also favor the gold too as well. So for me, we need to strike a balance with all of these ideas together and see how the market is actually digesting them. look out for structural pattern that could reveal the intentions of what market participants are doing at this point in time. Now, to remind us, I already done a top-down analysis on the XAUUSD during the weekend, so I will not be going into the higher time frame. Now, if you really want to have an overview into the background of how we got to the point you are seeing here on the 1 hour time frame, I encourage you to watch my weekend video on the XAUUSD. It's somewhere in my channel, so please check it out so you can have a background knowledge on how we got to this point. So during that video, I had a couple of structures that I said I will be using to navigate the structure this week. One of which is the fact that price action has been ranging ever since that massive move to the downside following the US election, and we saw since then price action has been confined within the 2,705 and the 2,655 area. That's about $50 range bound structure, and within that range bound structure we have quite some interesting situation around that our key level at the 2,680. So we saw price drop below the key level here this morning with an engulfing bearish candle, and ever since price dropped that broke down that key level, you will have noticed how this area around the $2,666.50 level had continued to be a barrier for sellers till this present moment. So this started during the Asian session, and for the last 1, 2, 3, 4, 5, 6, 7, 8 hours, sellers have been struggling to break through that zone, and this for me is a red flag that buyers are present around this point. That is, majority of market participants are deeming the gold cheap enough to buy at this point. So the current candle on the 1 hour time frame here, which though it still has about 24 minutes to go, you can see it has been oscillating around that area. Now the question for me here is, will this be a platform for buying opportunities this week? Well, in order to navigate this area, I have the resistant line of that range bound structure at 2,673. So I would like to see price breakout retest of that 2,673. By the time a breakout of this level happens, we will be having a neckline of a reversal pattern in play. And if this happens, we will continue to look out for more opportunities like the breakout of the key level at the 2,680. And one interesting thing about this key level is how it also shares a confluence with that descending trend line from last week's trading session. So by the time price breaks out of the key level at the 2,680, price will also have breached the trend line to emphasize that it may no longer have the capacity to continue to negate the bullish attempt, welcoming more buying opportunities in that regard. Then the 2,685, this is where the week started. This is the highest level for this week. A further breakout of that structure will definitely give us more buying opportunities. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us updates as at when due. Now, I'm going to be scalping the gold market today. For the last 1 week, I wasn't able to do the go-go challenge due to some very tight schedule that was beyond me, but we shall resume back into the go-go challenge this week. So for those of you who are willing to scalp and those who are part of the go-go challenge, we're going to be scalping this market together, so don't miss out on that session. I will be starting about 30 minutes before the New York session. So try to be part of that session. I will be sending the link right before then, so I look forward to seeing you guys on that one. So if price goes ahead to break out of the 2,686, I will also be looking at adding more buy position. Now, one thing I would like to say here is, if we buy and price action continues to move up, please note that we have an important confluence here at the 2,680, which shares which lines up with that descending trend line. So if price gets into that structure, we want to be securing all the buy positions on our all the buy positions that we took, and exercise patience to see how the market will react to that confluence. Okay, so if we start seeing selling pressure and this evolves into a reversal setup like a double top structure or head and shoulder pattern, then we can sell the breakdown retest of the neckline of that reversal pattern to continue that downtrend move. So that is how we are going to be buying today. So like I said, we are looking at buying above the 2,673, right? Now we will be looking to add more if price breaks out and retest the structure. But if a reversal setup happens and we continue to see that buyers are finding it difficult to break through, then we look out to sell from that area too. Now, in as much as we're looking out for buying opportunities here, what are the conditions that will make us sell? Well, for me to sell at this point, I will need to be very, very careful. And why is that so? I did mention earlier that the support line for this week, this is the support line for this week at the $2,666.50 level. And in the last 9 hours, you can see how it has become difficult for sellers to break through this particular area. What does this simply tell us? It tells us that buyers are strongly present around this area. Now look at this candle too as well. It's still oscillating around that area. It could turn out to be a hammer candle at the end of the day. This candle still has about 20 minutes for it to close. So for me, we need to exercise patience and wait to see how the market is going to be reacting to the $2,666.50 level. Now, what are the things I will be looking out for to sell? Now, if I want to sell the $2,666.50 level, I would want to wait for confirmations to happen, not placing the sell stop order right there. No, we're not doing that. The reason why that is simply because of the presence of buyers around this particular area. In fact, we could see a breakdown, it could happen and turn out to be a false breakdown, and price just continues to the upside from that particular area. So what we are going to be doing now is to exercise patience. So if price breaks down the structure, don't be in a hurry to join a sell. You see, it is better you miss out on a sell position than to enter a forced sell and lose money. All right, so what I would like to do is wait for price to break down the structure, and if it does, I will be patient enough to wait for price coming back, retest the structure, and I will be looking out for the structures on my lower time frame. So we are talking about 5 minutes, 10 minutes, or 15 minutes time frame. So all I want to see is signs that buyers are finding it difficult to maintain momentum above the $2,666.50 level, which will reflect on the chart as continued selling pressure below or around the structure, giving me that opportunity to join that decline. So that is how I'm going to be joining a sell here. And remember that we also have a support line. For those who saw my video on the gold, we had a support line of the range bound structure at the 2,655. The same thing will also be happening here. We will need to see price break down, retest the support line before we jump into a sell, because this area could also serve as a demand zone to push price to the upside. So if I see a double bottom structure here, I am ready to buy the breakout of the neckline, and if price breaks through, I'm willing to sell the retest of that structure. So this is how I am going to be managing my position on the XAUUSD for today. I hope I made myself very clear on that one. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we start rounding off on our trading active on the Forex Morning Mastery today. So I see your comment. What's the name again? Leon. Leon, how are you doing? Good morning to you. It says, could you please check $2,666.50 is broken, so shall I've entered in sell now. I think I talked about that a couple of minutes ago. I guess or probably you dropped the message while I was explaining or before I explained. If that is, please let me know in the comment section. I think I talked about that. We are waiting for confirmation before joining a sell there. That area has been a strong demand zone in the last 9 hours, so it shows us how resilient buyers are around that particular area. So for us to join a sell, we will need to see some confirmation happen before jumping into that sell. So I explained that earlier. Leon, are you still there? Let me know in the comment section. So in the absence of no further questions, I guess we have come to the end of today's Forex Morning Mastery. So it has been a great moment with you guys. I really do enjoyed it, and in fact I'm inspired this morning as we have very exciting setups that will be helping us navigate these markets today. So we were able to take on the 3 financial instruments on our watch list, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD. So we were able to identify simple trading setups that we are going to be using to navigate the market today. So I hope you were able to mark out these levels accordingly. If you are